In today's episode, I'll talk about three interesting stories. In the first story of the day, I'll talk about how Donald Trump now wants to end birthright citizenship in the United States. In the second story, I'll talk about foreign borrowings in India and what's really happening with the trend over there, and also how it affects us and our economy. And in the third and the final story of the day, I'll talk about SEBI's new consultation paper where they want to start micro SIPs of as little as 250 rupees. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy to understand, yet one level deeper as compared to your traditional news channels. I'm your host Anurag Bansal, and today is Friday, the 24th of January. By the way, a quick announcement before we begin. We've recently started an aftermarket newsletter where we cover the happenings of the market through the day. We publish this on Substack every day after the market closes. So if you are interested, do check it out from the link in the description. With that, let's begin with the first story. Donald Trump has recently announced that he wants to end birthright citizenship in the United States.
Birthright, it's ridiculous. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. But, we'll see. We have very good grounds. People have wanted to do this for decades.
Now, this means that children who are born on American soil to parents who are not US citizens or those who are temporary visa holders like the H1-B visa can no longer get automatic citizenship like they used to get before. And this has huge implications for thousands of families who are on H1-B visas, especially those who rely on their US-born children's citizenship as part of their longer-term plans to stay in America. But in order to understand more about why this is such a big deal, let us first very clearly understand what the H1-B visa exactly is. Look, back in 1990, the US government had created the H1-B program in order to allow American companies to hire workers with specialized skills from around the world. Now, these workers have usually been in the fields of technology, engineering, and healthcare. Now, every year, the government makes a limited amount of these particular visas available, which is 65,000 for all applicants, plus an extra 20,000 for those who have advanced degrees from US universities. But the thing is, the demand for these visas are so high that they are usually awarded through a lottery system now. And to give you some numbers for context, in 2023 alone, there were around 386,000 approvals across different channels for this visa. But recently, Donald Trump's stand on H1B visas has completely shifted. See, during his previous term as president, he was very vocally strict about it. He used to follow a Buy American, Hire American approach, which made it very hard for companies to sponsor immigrants.
American projects should be made with American goods. Secondly, we are going to enforce the Hire American rules that are designed to protect jobs and wages of workers in the United States. We believe jobs must be offered to American workers first. Does that make sense?
But in some of his latest remarks, he has talked about letting more competent people come into America, even if they train and help others. Listen to what he said.
I also like very competent people coming into our country, even if that involves them training and helping other people. And I'm not just talking about engineers. I'm talking about people at all levels. We want competent people coming into our country.
And by the way, during Joe Biden's term as US president, his administration had introduced changes which had made this program more modern, and it also added oversight in order to reduce abuse. And by the way, by abuse over here in this context, I'm talking about how some large IT consulting firms have been accused of gaming this lottery system. Now, they do this by sending in far more applications than the number of workers that are truly needed. So, for example, if a consulting firm thinks that they need 2,000 new staff members and the chance of winning a visa in the lottery is, say, 1 in 3, they might put in about 6,000 applications with the hope that around 1/3 of those will be eventually picked. Now, this might be good for these big firms for sure, but the problem is that it can very quickly crowd out smaller companies that genuinely need niche skills or specific specialists. Now, over a 10-year period, firms like Cognizant, Infosys, and TCS have managed to get around 350,000 H1B approvals by using this exact tactic. And when we look at usage trends in the H1B program, we see two different stories that unfold here. American tech companies like Amazon, Meta, and Google were asking for more H1B workers for several years. Amazon alone saw its visa applications increase by 478% after the year 2016. But in 2014, things changed a little little bit. Companies like Amazon, Google, and Microsoft saw their approvals go down a little bit. For instance, Amazon's approvals dropped from over 11,000 in 2023 to around 9,265 in 2024. But on the other hand, Indian firms that used to heavily depend on H1B visas have slowly slowed down the use of this program quite a bit. Infosys, TCS, and Wipro have all seen big drops, with TCS reducing its visa usage by 75% and Wipro by as much as 69% over the past decade or so. Now, one reason is that these companies are now hiring more people locally in the United States, or they are finding other ways to run their projects. But despite these changing trends, the share of Indian nationals in the H1B program is still massive. In 2023, about 72% of H1B visas went to people from India, which meant around 279,000 approvals. And for people who were unable to get a visa, many ended up using their skills at home in India itself. In fact, some studies show that those people who stayed back in India helped our country's tech sector grow to the point that we eventually surpassed the United States in software exports by the year 2005. This entire situation, by the way, is also sometimes referred to as brain gain, because while the US did gain some skilled workers, India also benefited when large number of talented individuals stayed back or later returned with new skills or networks. There is also an important link between H1B visas and innovation, by the way. In the US, immigrants make up only about 14% of the workforce, yet they account for nearly a quarter of all their patents. In Silicon Valley, for example, you will find that 56% of STEM, which is science, technology, engineering, and management workers, are foreign-born, and among software engineers, that particular figure is as high as 70%. A fascinating stat here is that almost half of America's billion-dollar startups like SpaceX, Uber, etc. have at least one immigrant founder. This shows that foreign talent does a lot to drive new ideas and industries forward, not just in our own country, but also abroad. Now, research on the program's impact suggests that the H1B system generally helps the US economy at large. Studies show that it has boosted overall incomes by hundreds of millions of US dollars, and one piece of research by Gaurav Khanna at the Center of Global Development found that every additional migrant in the H1B program increased US workers' income by about 1,345 US dollars, leading to a large combined rise in GDP across both US and India. Another study found out that if American companies are turned down for an H1B visa, they don't usually just hire more Americans. Instead, they actually move some of their operations or research overseas. So this means that visa restrictions can actually end up hurting America's job market in the long run, because it might encourage companies to shift even more work abroad. But there is a little bit of a nuance here. See, research shows that wages for US computer scientists might have actually been slightly higher without any foreign competition. But overall, the tech sector's expansion seems to have helped workers in related fields and kept the American economy more competitive at large. Now, there have also been some studies of places with large immigrant surges showing that local wages generally do not suffer and per capita income can rise in areas where there is more immigration. One more area that researchers look at is entrepreneurship. See, it turns out that immigrants start new businesses at an even higher rate than people born in the US, and they create both small and large companies, which often pay slightly higher wages than usual. And this further fuels the country's economic growth. Now, meanwhile, when immigrants from places like India come to America to study or to work, they can return home eventually and bring valuable knowledge and also connections back with them, which could eventually boost that country, in which case this is India's tech scene. Now, with Donald Trump's renewed plan to end birthright citizenship, H1B families are fearing to lose a key route to creating permanent lives in the United States. Now, many of them are stuck in extremely long waiting lines for green cards, which is up to 100 years in some cases, and having a child who is automatically a citizen has always been a part of the plan for stability. So removing this right now could make the H1B pathway much lesser appealing or manageable for thousands of skilled workers, especially when combined with tighter visa rules. So all of this shows how complicated the H1B story has overall become now. On one hand, there is a clear link between welcoming foreign talent and maintaining America's role as a global leader in technology and innovation. But on the other hand, there is a growing concern among some people that more immigration might come at a big cost to American workers or could be abused by big outsourcing firms. And the truth here seems to be more nuanced, with a lot of research suggesting that the program has been a net positive for the US while also bringing benefits to India India, and many other countries that supply workers to them. So at the end of the day, the debate over H1B visas has become even more heated because of Donald Trump's announcement about ending birthright citizenship. And that is why many experts think that conversations around who gets to come to America, who gets to stay, and how that impacts the economy will only get louder in the months and the years to come. With that, let's move on to the second story of the day. See, a few days ago on this channel, we had spoken about a very weird trend. There has recently been a lot of talk in the news about Indian companies borrowing money from abroad. Now, this is something that is called the external commercial borrowings, or ECBs. And for your context, an external commercial borrowing is when a company in India decides to borrow money from outside the country, usually in order to fund its projects, buy equipment, or expand its business. Now, some economists like Subramanian, Feldman, and Anand in a recent column for Business Standard wrote about how the RBI was controlling the rupee-dollar exchange rate very tightly. They said that if the rupee remains stronger than it should be, then American loans would start to look much cheaper than it should for Indian companies. And when the dollar is cheaper in comparison to rupees, an Indian company could very well decide to borrow in dollars rather than in rupees, simply because the interest rate on dollar loans might be lower than what they would pay on rupee loans at the Indian bank. Now, these economists then presented a chart which showed a big jump in how much Indian companies owe in foreign currency. Basically, in a short span of about 18 months or so, the total sum of these foreign loans went up by over 1/3. And the fear here is that if Indian companies keep taking more and more dollar loans, then one day when all of this money needs to be repaid, it could put a lot of pressure on the Indian rupee. Basically, companies would have to buy large amounts of dollars at once in order to pay back their loans, and that can make the rupee's value drop all of a sudden. But there is another side to the story. A recent report by SBI Research says that the chart showing an extreme jump might actually be incorrect. According to SBI, there are two different ways of measuring how much Indian companies have borrowed from abroad. One is the RBI's own figure, which is around about 190 billion US dollars. And the other one is a much larger figure of 273 billion US dollars, which comes from the Ministry of Finance. Now, SBI points out that if you look a little more closely, the bigger number includes about $73 billion worth of bond investments which foreign investors have made in Indian government and corporate bonds. Now, these investments are usually short-term and are made by foreign portfolio investors hoping to earn some profit. And SBI argues that it does not make any sense to count this in the same place as genuine external loans which companies have taken in order to fund their businesses over the long run. So if you then remove the $73 billion in bond investments, those two numbers, which is that of RBI and that of MOF, become far more similar, and it suddenly does not look like India's foreign borrowings have skyrocketed. Instead, there is only a $16 billion increase spread over 30 months, which is not even nearly as dramatic as what the earlier numbers were suggesting. Now, SBI's research also reminds us that there is a hidden cost to borrowing in foreign currency. See, most Indian companies hedge these loans because exchange rates can change without any warning. Hedging, by the way, is just like buying any insurance policy which protects you from wild currency swings. But the thing is, this insurance obviously is not free. It costs money, so it therefore reduces any advantage that a company might get from borrowing at a lower interest rate in US dollars. Even so, the SBI says that the cost of borrowing from abroad has come down a little over the last couple of years, and that in the recent financial year, which is FY 2024, they might have been more external borrowing than the previous year of FY 2023. But they also say that Indian companies used to borrow even more from foreign sources before the pandemic. So the current rise could just be a return to normal levels now. For instance, external borrowings were about 1.9% of India's GDP in FY 2020, but that number fell to 1.2% in FY 2024. Some people say that another reason why Indian companies might be looking abroad for money is because they have finally started to invest more in India. Because for a long time, many private businesses were very cautious and did not invest as much as expected. That worried government officials, including the finance minister, who urged businesses to put more money into building factory, buying machinery, and expanding operations. But now there are signs that the situation is changing. Recent data suggests more investment announcements are being made, and a large share of those investments are coming from private businesses and not just the government. In fact, the RBI found that private capital formation, which basically measures how much the private sector invests, reached about 11.6% of India's GDP in FY 2023, which is the highest it has been ever since 2016. Now that might have climbed even higher in FY 2024, by the way. If a chunk of the foreign borrowing is being used to finance new projects and modernized plans, then it could be a good sign for the Indian economy rather than a cause for panic. So the question is, how do you make sense of all these numbers? See, one lesson here is that macroeconomic statistics can be very confusing for sure. Numbers by themselves only tell you one small part of the story. And the moment someone attaches an explanation to a number, they basically introduce a very specific point of view, and many different analysts can interpret the same data in completely different ways. Even experienced economists sometimes end up disagreeing on what certain statistics truly indicate. And that is where the idea of macro tourism comes in. People usually look at the big picture economic numbers and end up drawing very quick conclusions about where the economy is heading. But the problem is that if you don't dive deeper into how these numbers were collected or what exactly they include, you might end up with a very incomplete or a very misleading picture for that matter. And in this particular case that I'm talking about, the inclusion or exclusion of foreign bond investments changed the entire narrative around India's foreign borrowings. And without understanding that, you might end up thinking that Indian companies are suddenly taking on a huge and risky amount of foreign debt when the actual story is more nuanced. So in the end, it is basically like a reminder that while headlines can definitely catch your attention, the details do matter. Two sets of official data can paint very different pictures. It's not always clear which view is correct, and sometimes both have valid points depending on what question is being asked. Stats can definitely reveal a lot, but sometimes what they hide can be very important as well. With that, let's move on to the third story of the day. SEBI recently published a consultation paper where they proposed a plan to make mutual funds more accessible to everyone by allowing very small investment amounts starting at just 250 rupees. And you can almost think of it like those small shampoo sachets that you see in stores. Basically, instead of needing a large amount of money to start investing, SEBI wants people to be able to invest in tiny regular amounts of money called micro SIPs. But to understand why this is happening exactly, we will have to take a look at the bigger picture of the mutual fund industry in India. See, over the years, mutual funds have grown quite a bit. Around 2014, the total amount of money that was managed by mutual funds, which by the way is called the Asset Under Management or AUM, was about 10 trillion rupees. And by November 2024, which is about 10 years later, that number had grown to 68 trillion Indian rupees. And the number of individuals investing has also shot up. Back in March 2018, there were about 1.7 crore unique investors. But by November 2024, that count was 5.18 crore individuals. So more money and more people are entering the market for sure. But this growth is not evenly spread across our country. A large portion of these investments still come from big cities. For instance, Mumbai alone accounts for about 27% of India's mutual fund assets, which works out to roughly 18 lakh crore rupees. Delhi comes next with about 12%, followed by Bangalore at about 5%. And if you just add Mumbai, Delhi and Bangalore together, they together make up 44% of the entire mutual fund market in India. And if you add Pune and Kolkata to this mix, these top 5 cities contribute to over 50% of the country's mutual fund AUM. And that means people in smaller towns and rural areas are still not a big part of the mutual fund world. Now, SEBI's proposal is basically aimed at changing that. By encouraging mutual fund companies to let investors start investing with as little as 250 rupees at a time, they are hoping that more people from all over the country will feel comfortable in joining in. At the moment, some mutual fund companies do let you invest small amounts, but the thing is, this is not a standard practice everywhere. SEBI basically wants to make it more official across the industry so that no matter which mutual fund you choose, you can invest in these small and more affordable chunks. But one challenge here is that every time someone makes an investment, especially a very small one like 250 rupees, there are many costs behind the scenes. These include payment gateway fees, charges for record keeping, and so on and so forth. Now, Deepak Shenoy, who is an expert, shared his thoughts on Twitter, and he pointed out that each transaction can cost around 2 rupees. Now that I know may not sound like a lot to you, but when you're investing as little as 250 rupees, the fees can be around 0.8% of the investment amount. And in some cases, it can also be higher than the expense ratio of certain direct mutual funds, which pretty much defeats the purpose of making investments cheaper for everyone. Now back to the city part of the equation, when you look at areas outside the top 30 cities, we can see another reason why SEBI's plan matters here. See, only about 19% of mutual fund assets currently come from these smaller cities and towns, though these B30 assets did grow by about 41% last year. But interestingly, around 86% of investments from below 30 cities or B30 cities go into equity schemes as compared to 55% in top 30 cities. So in other words, there seems to be a real appetite for equity investments in these smaller places, which is a promising sign for mutual fund companies who are looking to expand. Now, in order to make the micro SIP concept work smoothly, SEBI is also planning several measures. They are suggesting that everyone involved, which is payment gateways, distributors, and many others, should offer discounted rates for these tiny transactions. They are also looking to use money from the Investor Education Fund in order to help cover some of these back-end costs so that it is not too expensive for people to invest smaller amounts. One more interesting idea here is to give distributors a 500 rupee incentive if they can bring in a new investor who stays committed to these micro SIPs for at least 2 years. Now, this is meant to reward those people who help newcomers stick with their investment plans. But currently, SEBI has put all of this in a consultation paper and they are inviting feedback from the industry until February 6, 2025. It is only after that they will decide how to finalize and roll out these rules. But the big question here is whether this approach will work as smoothly in practice as it does on paper. It is a potentially important step because if SEBI figures out how to manage costs and bring more people from all over the country into mutual funds, we might see even bigger growth in the coming few years. With that, let's move on to the final section of the day and talk about the quick news tidbits. First, smartphones emerged as India's second largest export category, with exports reaching 13.1 billion US dollars during April to November FY 2025, which is a 46% jump from 8.9 billion in the same period last year. This growth has narrowed the gap with automotive diesel fuel exports to just 400 million US dollars, down from 10 billion US dollars in FY 2024. Second, Tata Communications is gearing up to launch AI Studio, which is a platform as a service or PaaS by March 2025, built on its AI cloud infrastructure backed by Nvidia's Hopper and Blackwell GPUs. Now, the platform will offer AI tools like data management, multimodal research, and machine learning operations to enterprises, startups, and government projects on a subscription model. The company is also eyeing growth in the US and is aiming for 1 billion US dollars in revenue by 2026, despite challenges like recent executive orders. Third, Paras Defense and Space Technologies has announced a 12,000 crore rupee investment to establish India's first optics park in Maharashtra, slated to begin operations in 2028 and complete in phases by 2035. This project is supported by the Maharashtra government through land allocation, incentives, and approvals, and it is aimed to create over 2,000 direct jobs. That's all the news and stories I have for you today. I hope you enjoyed today's show and maybe learned something new from it today. This is your host Anurag Bansal signing off. I will see you on Monday. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.